Good morning and welcome. Patriot Radio News Hour, Joe and Jason on this Friday, and everybody's getting nervous. Is this biblical? Have you been waiting for a sign? Gold's up 50, silver's up 80 plus cents, 83 cents right now. 1 million people. Over 1 million people are been told to leave Gaza. I don't know how we're going to do that. Obviously, somebody knows something that they haven't told us yet, but when do they ever tell us ahead of time, right? 800-951-0592. That is our toll-free number. Wealth insurance is what we do. Man, we begged you. I yelled. I talked sweet. Well, I don't know if I talked sweet, but I did everything I possibly could think of to tell you, don't let that pullback pass you by. Right? Now, did I know that this was going to happen today? No, but I had a feeling, right? We all did. The inflation numbers weren't good, but they weren't bad enough. We've had bank earnings out today. We had JPMorgan, Wells Fargo, I think Citi. They were okay. JPMorgan, the Silicon Valley, they just got all the good stuff at super low rates. That really helped them. But I'll just say this: all three, the story's the same. Put in more money into loan loss provisions. More money away, getting ready. That's the financial side. Obviously, war drums are beating today. On top of that, Steve Scalise, he's out. He's out, right? The Republicans, I'll call it the Matt Gaetz and friends, they want Jim Jordan and nobody else. Well, maybe Donald Trump, but nobody else. Which means to me, you know what, we got less than 30 days. I think we're going to have a government shutdown. I think you're going to see the last of the rating agencies. Moody's will downgrade U.S. debt. Why not, right? On top of who knows what's going to go on in the Middle East here. Right now, it's looking like, at least when we look at the markets here, that people are worried this thing's going to expand, right? That Iran is going to be drawn in. I don't know. Obviously, there's going to be a major offensive in Gaza. We'll have to wait and see how that all plays out, Jason. But Jamie Dimon today making comments about, man, this is the most dangerous time we've seen in quite some time. Going back to, and he's talking dangerous. I don't know that he's necessary. Obviously, the wars. But really, I think he's talking about the banks, the government, the debt, what the bond market's been doing, right? There's a lot of different factors that are all at the edge of the cliff. I don't have you. I got nothing. Jason's talking. He's trying to. Right? Yeah, nothing. All right, well, we'll work on Jason's volume. We'll work on his volume. Am
I there now? How about now?
Yeah, you're there.
There we go. I was on hold. It's been there's been a lot of distractions this morning. There's a lot of stuff to take in. What I was saying is that the people that know the economics, they've been seeing this situation worsen for a long time, and it's that feeling. What Joe was talking about, with the head of JPMorgan Chase, Jamie Dimon, that feeling you get right before you go over the big first hill on that roller coaster. You're going to be okay, but you don't know what's, it's going, right? But when it comes to economics, it doesn't take, one moment. It could take a month. It could take a year before you actually crest that hill and go down. And so when he says he doesn't know how bad it's going to get, he's worried about how bad it's going to get. Well, because it looks like it's going to be really bad. It looks like it's going to go crashing down hard. And I just what you have to do is prepare yourself well ahead of this. well ahead of this. You should have been buying gold over the last year to 2 years especially. You can still get it at a pretty good price. Joe says he's only seen gold go up $50 a handful of times. I thought it was a few more times than Joe was saying, but I haven't paid attention to it as long as Joe has. But it shows me that Joe's worried. Well, maybe Monday it goes back down. We've seen this before, where sometimes it ebbs and flows. But I'm kind of seeing where we're going to see inflation. Gold always tends to be a leading indicator of worse inflation. So this $50 rise today could be another $50 on Monday, or it could be $20 on Monday. Or next week we could see another $50, $75, $100 going up, and that's going to show me, because I didn't get a chance. We talked about CPI yesterday. I didn't get a chance to jump in. I just didn't jump in. But that number, the year-over-year number, which is the number I like to look at, should have been lower. This was the last chance for it to really go lower, to show that the Fed is winning against inflation, and it stayed the same. In the next 3 months, and actually the next 6 to 8 months, the year-over-year from the previous year dips fast, which means the year-over-year for this year versus last year, if inflation is now gone, that number's going up. And so those that know, like the Jamie Dimons, or the people that want to buy some safety, they're going to do that now, and then you, the public, are going to see a $100 bag of groceries, which is out of control, is going to be a $200 bag of groceries, and gold's going to already be there. So it's time to buy it.
Disney announced price hikes yesterday. Chipotle last night says, hey, guess what? Yeah, that burrito, those burrito toppings, they're getting awfully expensive. Right? Prices still heading higher, but what is Jamie Dimon talking about when he says it's the most dangerous time he's seen in decades? Here's the best part. Gold's not at an all-time high. This is still the sweet spot. We'll be back.
Yep.
$800-951-0592. Joe and Jason, Patriot Radio News Hour here on this Friday. A quick look in at the markets. The Wall Street is mixed right now. The Dow's up 20 points. The S&P's down 13. The NASDAQ is down 100 points. The bond market, which, listen, there's big trouble here in the bond market. I know you're like, well, Wall Street's still hanging in there. Yeah, I know, it's at 33,000. I'm telling you right now. And it's, believe me, when we get to Jamie Dimon, he's going to tell you the same thing. They want you to believe this is a war move. I don't think so. We've got much bigger problems ahead of us. But the 10-year note at 4.64 went all the way above 4.7 yesterday. Gold's up 50 at 19.20. So we're pretty much almost back to where we were. Almost back to where we were 3 weeks ago. Silver, not a surprise. Silver, it always is pretty volatile, but it's up over 80 cents. Right now, knocking on the door to $23. Crude oil, yeah, it's up $3. I don't think anybody's surprised with that move either. You need to have your gold and silver put away. You need, listen, if you've got big money, you guys, you're in your late 50s, early 60s, mid 60s, late 60s. You got 500,000, a million, 5 million sitting in 401ks and IRAs. You better be talking to Joey. I'm just telling you right now. Get that stuff into non-taxable things. Trust me when I tell you. It's why we keep talking about why refi. Now, we know the deal. They got to have at least $50,000. Some of you can use your existing IRAs or a 401k. You get up to 10.25% return. There's no fees. It's fixed. It doesn't care about Israel and Iran. It doesn't. It doesn't care about Jamie Dimon saying, man, we got big problems. It doesn't care that the Republicans can't even get a speaker. We got a government shutdown coming again in just over a month. and we're nowhere near the end of this thing. Check them out. InvestYRefi.com. That's the word invest. The letter Y, REFY.com. Or just call them at 888-YREFI-24. Stop playing around. Right? You've been waiting and waiting. I don't know what people wait for. Well, I'm waiting for what? And again, what are you waiting for? You already know what's going to happen. What, you're waiting for it to happen and then call? That's the exact wrong thing. But what did Jamie Dimon talk about today? Because, I mean, on paper, the earnings looked okay. Now, granted, they got so much fluff and left pocket, right pocket. But he said, beyond the military stuff. See, this is the important part. And don't get me wrong. I don't know what's going to happen this weekend. I don't know about the rest of you. This is a bad deal here. And it has the potential to get really bad. But outside of that, the potential for things to get really bad is here. Jamie Dimon immediately started talking about the debt. How is this all of a sudden now? That's all everybody wants to talk about. I mean, this is why Israel's on the front page. Because you're like, what are you talking about, Double? No one's talking about it. I turn on Fox, and they're talking about Israel. I turn on CNN. They're talking about it. Everybody's talking about Israel. I'm telling you right now, in the financial markets, they're worried. The bond market is doing bad things. And we just had yesterday on the half-empty cup, we had to do another, the worst auction yet this week. We had the third longest tail in history yesterday on 30-year bonds. The banks are being forced to take record levels of the auctions. And, of course, that means what? I'm telling you right now, they're burning through what's left of that reverse repo money. They're just burning through it. Jamie Dimon said the largest peacetime fiscal deficits ever. This is unheard of. It's not supposed to happen this way. And you know what? Let's be honest. It's the largest wartime deficit ever. We got deficits worse than Bush and Obama. Way worse. There's only one number higher, and that was the 1 year of COVID. And he says that the risk it continues to rise. To Jason's point, they're going to make inflation worse. Interest rates are not going to go down. Remember, he warned a month ago. Well, actually, about 3 weeks ago. Remember when gold had that big down day? That was Jamie Dimon. Jamie Dimon was saying, hey, how about 7%? Forget about 4.7. How about 7? He says the Federal Reserve, here you go, Jason. Let me give out our number, 800-951-0592. Buy whatever you can. I'm just telling you. He mentioned, and this is the first that I've heard this, and it's coming from Jamie Dimon. The Fed's efforts to reduce its bond holdings is now causing a problem. What? Uh-oh. Quantitative tightening. I told you, getting ready to end. Getting ready to end. Why? Because, well, guess what bank probably is ending up having to buy most of the bond auctions? JPMorgan. Right? They're the one like, wait a minute. I didn't want to buy all these 30-year notes. I didn't want to buy these 10-year notes. I didn't want to buy the 3-year note. So there's the first shot. Stop quantitative tightening. I wonder when he's going to demand quantitative easing again. He says that liquidity is at risk now. Well, what does that mean? Liquidity is at risk. Well, by the way, I know you're tired of hearing it. Banks broke another record, new record high on borrowing from the Fed. Shh. I mean, but JPMorgan had great earnings, and Wells was okay, and Citi was good, right? The big banks said everything's okay. Listen, the big banks can just do left pocket, right pocket better than the little banks. Jamie Dimon's telling you there's a liquidity problem. That's what I've been telling you. That's what the bond market is saying. And he said that it's reducing liquidity at a time when market-making capabilities are increasingly limited by regulation. In other words, what he's saying is the Federal Reserve is forcing us to buy all this stuff, Jason, and it's a huge problem now.
Quantitative tightening, Joe, in my estimation, is not ending at all, not right now. First of all, it's not going to end until the reverse repo is empty. Then once that's emptied out, then there'll be a decision to be made. I really get the feeling, Joe, that if there's a big enough geopolitical sideshow, because how many times over the last, pretty much since I've ever been doing this, any of these gold and silver shows, I said that they'd love to have some big, huge thing to point markets crashing at. So Israel, in an elongated, massive regional war in that part of the world, can be blamed for everything that's getting ready to happen that we've been saying is going to happen regardless of what the next emergency was going to be. And just the timing of why not 6 months ago, Israel? Well, it's happening now because I think this is when the markets are getting ready to go. And so I think quantitative tightening, Joe, I think the Fed wants to get rid of a lot of banks. I think they want to crush a bunch of banks. And this market's going to go down hard. And I think the tightening for sure doesn't end until the reverse repo empties. And then I think they kind of hold on a little bit after that, even, Joe. I think they need this inflation to go away, and they also need to move their economic system to a place that's, I guess, more where they can kick the can down the road some more, I guess, at best. Because, Joe, what do they have to go? I mean, I was listening to that Zhang, inflate their way out of this mess is the number one play. That's like hyperinflation. That's the only way to get out of these big numbers. The numbers you're talking about, the deficits and the debt, you have to hyperinflate your way out. So how are you going to get the American public to be okay with that? Well, you tell them the whole world's going to blow up, I guess, right? Is that how people are going to say, well, at least I have food and I have a house. Yeah, my $100 bag of groceries now costs $500 for a bag of groceries. But at least I'm not in Israel, right? I mean, this is the game that they play over and over and over again, and it's becoming an annual event now. It used to be at least every 5 to 8 years, 10 years. 2020, you had a pandemic. 2021, you had the so-called assault on the Washington D.C. Capitol. 2022, you have the Ukraine war starting, and they couldn't make it out of 2023 without Israel blowing up. So the next one, Joe, I'm sure they'll add another one. Let's just say 2024 in March, when that reverse repo money runs out and the markets are already crashing and burning probably before that. Just throw another one on there. Was it China and Taiwan, or is it going to be something elevated in Ukraine? What's it going to be, Joe? Right? But it's all going to cover this economic mess that we've been telling you is going to happen, and we keep telling you to buy gold before it happens. So you better get smart and buy your stuff now. Because I told Joe a couple of customers that were saying they're going to leave it to God's time when they want to buy. I actually have customers said they've been meeting with me, new people or people that are trying to figure out when they want to buy more, and they're saying, well, I'm going to figure it out. And here's what happens is people are looking at buying gold like they're buying stuff at Walmart, which is completely the wrong way to look at it. Because when you put savings away, you're not supposed to put that into your monthly bill paying situation. You're supposed to put money away in savings, and then you look at what's left, and that's how you pay your bills. But when you wait to buy gold, and then the inflation comes in harder, and you just missed your chance because now you have to pay all these bills that are getting harder every time, and you could have had to put away, and you could have just struggled a little bit the next few months to get back ahead. So if you're sitting there looking at your bill paying situation, you got a little bit that you could put away and maybe catch up on the other stuff later, this is probably a good moment, Joe, for that. I mean, I can't believe anybody would wait when we've been telling them this period of time has been not the last current situation of the good old days to buy gold. We're looking at 3,000 gold somewhere in the near future, Joe. It's somewhere next year maybe it could be 3,000. It could move that quickly.
800-951-0592. Mortgage defaults. Well, and I'm not talking about commercial. Residential mortgage defaults. We haven't talked about that at all. Banks are now reporting that the pace, now granted, this is from a extremely low level, but mortgage defaults are rising at the fastest pace since 2009. So, right, this is kind of in the throes of the financial crisis, right? The housing bubble had burst. The financial crisis had come. So the pace here now, it's early. I mean, this is the last thing banks need. Jamie Dimon today. Hey, we're putting more money away for commercial defaults. We're putting more money away because of credit card defaults. Now they got to start putting more money away for mortgage defaults. You see where this is headed. You can see why Jamie Dimon's crying about liquidity. We'll be back. $800-951-0592. Patriot Radio News Hour, Joe and Jason on this Friday. And it's really a litany of events here. We've got the situation in the Middle East. We've got earnings out of banks and the warning out of Jamie Dimon. Liquidity. The lack of liquidity in the markets. Gold's up 52, 19.21. Silver's up 83 cents here, 22.80 today. $20 gold pieces, 21.75. That's a $20 savings, 21.75. And I'll just tell you right now, we have relationships. The largest dealer on the West Coast. When we call, just so you know, when we call, Brittany she makes all the calls. You know what she says? Hi, it's me. Why? Because they know her by voice. That's how often they talk with us. The second largest wholesaler in the United States, out of Florida, same thing. The largest wholesaler in the world. We talk to all of them every day, multiple times a day. The guy on the West Coast, I have nothing. Britta's like, excuse me? Well, silver, I have nothing. That was his answer. Florida. We have no circulated gold left. Somebody last night called and bought everything we had. The largest wholesaler in the world said essentially, hey, we've got limited product, prices and premiums, right? They're going to continue to rise. I don't know where this goes. Right, I'm less worried about, okay, I know it was a big move today, and maybe it goes down Monday, maybe it doesn't, right? I'm telling you right now, Israel makes it worse. It was already going to be a very tough rest of the year, and 2024 is going to look ugly. Now you have the largest bank in America saying to the Federal Reserve on an earnings call, hey, we got liquidity problems, right? This bond market thing is a problem. We've had some, again, I've been doing this a long time. The carnage that's been in the bond market this week, these auctions have been terrible. Of course, remember I told you about BlackRock? Remember what BlackRock said? Yeah, dude, we're not buying any long-term debt from the U.S. None. On Tuesday, the banks had to take down some of the largest share of the auctions. You just don't see. You don't see them having to take down 20+% of auctions. In other words, hey, after the foreign governments came, after the money markets came, right, the hedge funds, whatever, everybody that needs them, the insurance companies, gosh, there's just no more bids. And, of course, the banks had to bid something. Right? They had to bid something. Otherwise, can you imagine how bad it got? I mean, remember, the 10-year note hit 4.9 out of nowhere. They're like, oh, my God, if we don't, think how bad it's going to be. So they had to start buying 20% of the auction. Wednesday. And that was on a 3-year auction. That's not even that long term. Wednesday, it was the 10-year auction. Wow. It actually made Tuesday not look that bad. This time the banks were smarter though. They're like they bit their lip. And I said, okay, we're just going to bid here. It's still a big tail, but trying to keep rates from going nuts. And then yesterday, listen, the 10-year note yesterday, they tried to fool everybody. This is how powerful they were trying to convince everybody. Nobody wants, hey, the 10-year note got down to 4.5, and then the 30-year auction came. And it was going to be the largest tail in history. Which, by the way, that's bad, just so you know. Just take my word for it, okay? Tails are bad. And the banks had to buy it all again to keep the yield. The yield I think it got to like 4.72, 4.73. And the banks just took down more than 20% of. They didn't want it.
Yeah.
This is what Jamie Dimon is talking about, saying, man, and you guys are selling all your debt, plus we got all this government debt. We're running out of money. And again, here's what he's really saying. Nobody wants to buy this crap. BlackRock won't come to the auction. China's like, hey, wait a minute. We need stimulus money. We're selling treasuries. Japan's a mess. Jason, again, I know everyone's got everybody focused on war this and war that. It's very, very clear here. Jamie Dimon said this is something, we just had the financial crisis. I'm telling you, this is going to be worse. I keep telling you. He didn't say this is going to be the worst thing since the financial crisis. He said this is the worst it's been in decades.
Jason. I think you're kind of selling what I was saying earlier in the show, which I think the Fed wants to crush these banks. So what you're saying is the Fed's not printing, which I think they're going to continue not printing for a while. The banks are essentially forced to have to load up on some of the stuff that they don't want to buy. How much longer are they going to do this, Joe, and not get liquidity and not get printing? And the big banks, Joe, the small banks borrow from them essentially in a lot of ways, so they're going to get crushed first. So I think what I'm hearing you say sounds like it just goes right in line with what I was saying, which I think the Fed wants these banks gone. They want to crush and destroy many, many banks over these next few years. And when things go bad, well, let's have a distraction. Let's have a war, right? Don't look over here. Money doesn't matter when there's things blowing up, right, Joe?
Yeah, there's nothing to see. We got bombs blasting in there. 800-951-0592. The freight train is coming. 800-951-0592. Silver's now up 95 cents. Went up 12 cents in like 2 minutes. By the way, U.S. Silver Eagles today, $6.20 a roll. If you want a case, $15,250. $20 gold on sale, $2,175 at 800-951-0592. I'm going to try not to yell, because I really do. And I'm not yelling at you. I'm yelling because of the situation they've put us in. Get your money out of the bank. I'm telling you. Jamie Dimon doesn't say things like this, right? He's not a guy that, I want to be a big deal, and they bring me on TV, and I say dramatic stuff. Peter Schiff says dramatic stuff, right? Jamie Dimon doesn't say this unless he feels like Jay Powell isn't listening to him. And on this earnings call today, he said there's a liquidity problem. That's what he said. What does that mean for us? Unfortunately, you know what it means? Right? Here comes the banking crisis again. We knew it wasn't over. We just didn't know when it was going to start again. And now, kind of like, the Republicans, right? They got that group that knows, man, we've got to get spending under control. We've got to do this. And they don't want to do it. And they can't get a speaker. They can't get enough votes. Same thing's happening right now. The bond market is forcing the issue here. They're forcing the issue. And I'm just going to say this. This is, when you think about it, listen, 1920, it's not bad at all. Yeah, it would have been better. Would it have been better if you bought it 1820? Yeah. But, hey, that's pretty good. $23 silver, that ain't bad at all. Consider yourself lucky. How about this? So they do this University of Michigan survey every month. How's the consumer feeling? Right? I always used to laugh at it, right? But okay, but they make a big deal out of it. It broke a record this month. Well, one piece of it broke a record. For the first time in its history, when they asked the consumer their assessment of their personal finances, which they always are overly up. You talk about Homer. Ask anybody about their personal finances, and most of them lie through their teeth. Oh, it's great. Well, it declined by 15% in a month. Year over year, business conditions plunged 20% in a month. But that wasn't the record. 49% of everyone surveyed said that inflation and higher prices was eroding their standard of living. That is a all-time record high where half of Americans are now saying, my standard of living is going down. And that was the problem, right? It'd be great if they're like, hey, it's going up. No. Half the country is admitting this is the problem. They're admitting it's going down. And Jason, most people hate to admit that.
most people definitely don't like to admit when things are going wrong. Now, a lot of people will admit when things are bad, when it comes time to go ask for help. Right, Joe? If you wait as long as you can and you push as hard as you can to not ask for help. The average person. I know that some people love to go to mom and dad government and go get that help, but the average person has a little bit of pride and wants to try to get this thing fixed themselves. And unfortunately, the average guy, Joe, especially the average guy doesn't listen to this show. They don't listen to this radio station. They just don't know what's going on. The average guy is getting destroyed by the system that's in place. The system in place is supposed to keep you poor. You're supposed to work like a rat in a wheel for the rest of your life, and then when you expire, they want your kids to join up and take your place in the wheel. And you, the individual, has to figure out how to keep yourself safer and in a better position and keep your family in a better position. And so, yeah, Joe, it's the average person is doing really badly. They don't want to admit it, but every day, Joe and I probably talk to people kind of the same. Whenever we have conversations with, for me, it's always with my wife. I listen to my wife's conversations because she has a huge social group. She talks to everybody, and I hear it. She has a lot of people she talks to, and there's just nothing but scary, unhappy, worried feelings when it comes to how much this costs and how much do I need to pay for the bills, and I have to move here, and we're getting divorced, and all this lower standard, all this bad stuff is happening, Joe. It's getting worse and worse. Worse and worse.
800-951-0592. Very quickly, there has been, and this is just happening, that's making its way on the internet, that Qatar, the Emir of Qatar, they were claiming that he was going to shut off natural gas supplies. Don't believe that. Don't believe that. I'm just saying right now, gosh, if that happens, gold will be up like $500. They are a huge supplier of natural gas, but don't believe that. That is not what was said, but I'll tell you about it. We're coming up on the break. I'll tell you about it when we get back. Eight 800-951-0592. Again, $20 gold on sale, $21.75. 10th ounce, $255. Rolls of Silver Eagle, $620. Cases of silver, $15,250. Get your money out of the bank while you still can. 800-951-0592. Now, there is a clip out there. It's gotten over 1 million views, almost 2 million views. It is showing the Emir of Qatar. He absolutely had a press conference. Matter of fact, the U.S. is in Qatar right now. The big hitters of Hamas live in Qatar. So this is an important thing. Obviously, he was definitely giving a speech in favor of the Palestinians and talking about Israel going into Palestinian lands and this sort. But somebody said in the translation that Qatar was going to cut off the gas. By the way, Qatar supplies more gas to Europe than anybody. It's not even close. Matter of fact, I want to say they may be the world's largest natural gas supplier. That has come out to be, that is not I'm being told that is not the right interpretation. That is not what he had said. And I believe that because if he actually had said that, the Dow would be down 1,000 points. My guess is gold would probably be up $200 or $300. I mean, crude oil is up $4 right now. It'd probably be up 10. I mean, that would be bad. Now, here's the thing, though, Jason. Could it happen? Right? This thing gets bad enough. There was no doubt that the premier of Qatar was throwing his support to the Palestinians. But if they decide to weaponize their oil and their natural gas, that's a new wrinkle.
Well, I wouldn't when it comes to translation, lost in translation, right? Is that what they say? why do I get the feeling maybe he did say something like that, but it needs to be covered up very quickly? Maybe it wasn't, I'm going to. Maybe he said something in the lines of, I have the power to. Oh, no, you got to move. Let's just put that to the side.
Right.
We're not going to listen to that. I don't know, Joe. But to me, war is war. And like I said,
maybe that's
the kind of economic situation that's getting ready to happen is this kind of size of thing. Maybe
that's hey, Israel, be careful here.
Yeah.
Right.
Yep.
Right. And I don't know that gold's up 54 now. The Dow is now negative. The losses on the S&P, the Nasdaq are picking up here. And again, Jamie Dimon said, set the war stuff aside. We've got a crisis that's unfolding. And then Bloomberg just came out with an article saying there's a changing of the guard in the U.S. debt markets, and it's not for the good. Hedge funds, mutual funds, insurers, pensions, and they all want higher rates of returns. There's not enough buyers that are willing to buy at low rates. This is what Jamie Dimon was talking about. Get that money out of the bank here. Get safe. 800-951-0592. Jason and I, we're going to come right back with the half-empty cup.